So this is gonna offend some people, but even though it may sound simple, getting a business loan isn't the answer to all of your problems. I've had quite a few clients who took out a business loan and they end up defaulting on that loan because their business went under. And so now they have to go through the whole credit repair phase to be able to get more credit in the future. So in this video, I'm gonna give you guys 5 reasons why you shouldn't get a business loan and how you can prepare yourself and your business for funding options in the future. So first, you might want to know, what is a business loan, right? A business loan is an installment loan under your business's name with you or a credit partner as the personal guarantor. You're responsible for making monthly installment payments on this loan through the duration of the loan term. So we know what a business loan is. How does it differ from other funding options? There's 3 main funding options out there. You have business credit card funding, business line of credit funding, and business loan funding. Depending on whether you need short-term capital to get a ROI within the next year, a business credit card, a business line of credit may be a better option versus if you need capital for the long term and it may take you a few years to pay back, it may be a better option to get a loan. Depending on where your business is and what your goals are will determine whether you need a line of credit or a loan. Let's say you just need money for 3 to 6 months. It may be best to get a 0% interest business credit card, leverage the capital on the credit card, make the money from your business, pay back the credit card within that 0% time frame, which may be anywhere between 6 to 12 months. Similar with the business line of credit, lenders will only require you to make interest-only payments, meaning if you borrow $10,000 and the interest rate is 10%, your monthly payment may be $100 or $200 a month, which covers just the interest. Let's say that $10,000 yields you $20,000 in 6 months. Now you can continue to use that line of credit. Same with a credit card. They're revolving accounts, so you're able to continue to use the capital as you pay it back. Versus with the loan, if you need a larger amount, a loan may be a better option for you. This loan will require you to make monthly installments for a year, 5 years, 10 years, whatever the case may be. So now when it comes to the 5 reasons why you don't need a business loan, reason number 1, it may be a little obvious, but you may not actually need the loan. And the reason I say this is because you always want to have a play for your money, right? Now, let's say you haven't made any money or you made a little bit of money, but you want to get a loan because you see people online talking about, hey, get this no-doc loan, get this, XYZ. But if it doesn't make financial sense for you to take out a loan, go get the bank's money, and you don't even know that if I put $10,000 here, it's going to give me a 2x, 3x on my money. If you don't know things like that, it doesn't make sense for you to go take out a loan just for the sake of taking it out. Second thing, you may not have collateral. So a lot of loans will require you to have some form of collateral. The collateral may be you being a personal guarantor, or it may be you having some type of equipment for your business. So if you don't have the collateral, then you may not even qualify to get a loan. The current prime rate is 8.5%, which means banks aren't going to give you any less than that on a loan. If you have great credit, you may be able to get a 10 to 15% interest rate on a loan. Now, if you have below a 700, you may be looking at 15 to 20% on a loan. Depending on how much money you need from the bank, it may not make sense to go get a loan. It may be better to go get a business credit card, get the 0% interest introductory offer, and use that capital for your business. Your business just isn't ready. So what I mean by this is lenders typically have certain requirements for getting a loan. Your business typically has to be 1 to 2 years old to qualify for a loan. And you typically need to provide tax returns, at least 1 to 2 years of tax returns. So if you're starting a brand new business, then you don't qualify. You may need to focus more on acquiring more customers, increasing your marketing efforts. There's a lot of lenders, when it comes to loans, they'll want to see $10,000, $20,000 revenue months to, actually qualify you for a loan. A lot of lenders, they want to see 200 plus in yearly revenue to qualify you for a loan, because they want to make sure at the end of the day that you're going to make your monthly payments on this loan. So my 4th reason is having a low credit score. Y'all know I'm all about credit. When it comes to a loan, you're going to have to be the personal guarantor for the loan, and most times you're going to want to have at least a 700 credit score. Now, if you don't have a 700 credit score, There's still options out there for you, but you're gonna be limited with those options, and you're probably gonna get hit with a 20 to 30% interest rate on the loan. So you wanna be careful about taking out a loan if it's not gonna make sense profit-wise for your company. A lower credit score can also cause the lender to require additional information or additional documents on top of the documents that you've already had to submit, such as your tax returns, personal financial statements, bank statements, and things of that nature. So this may delay the approval process 30, 60, 90 days, versus someone with a higher credit score. They may be able to close on a business loan within 30 days or less. So if you're struggling with a low credit score or you're struggling to get funding, text the word FFB to 201-559-8849, or you can click the link in the description below to book a call with my team. So we'll help you have a play for your money, family. Let's get it. So last but not least, reason number 5, you could actually risk losing your business, meaning you default on the loan, the lender may put a lien on your business or may even seize the assets from the business and may try to come after any personal assets that you have. These are real risks that you may incur by getting a business loan when you're not prepared to get it. I have clients who've gotten business loans, they've defaulted, these loans reported on their personal credit, drop their credit score, and they're not able to get anything on their credit now. So now they have to go through the whole repair phase to get their credit score back up. So you don't want to take out a loan just because you could get approved if you don't know what to use the money for, if you don't have that proof of concept. Now, if you want to set your business up for success, here are the steps I've taken to secure over $300,000 in business funding. 1, you want to make sure your personal credit is A1. You want to hit those 6 Credit Karma factors: payment history 100%, credit card utilization less than 10%, no derogatory marks, meaning collection accounts. Credit age, you want to be at least 2 to 3 years old. Total accounts, you want to have at least 5 to 10 open accounts. Hard inquiries, you want to have no more than 6 hard inquiries within the past 6 months. The second thing, you want to have your proof of concept, meaning you want to know how you bring in leads, how you generate revenue. This will help you to see what areas you need to improve in to bring in more revenue. Third thing, you want to know your profit margins. This is basically your business revenue minus your business expenses divided by your business revenue. So let's say your revenue is $10,000 for the month, your expenses are $3,000, you're left with $7,000, you divide that by $10,000. So your profit margin is 70%. So having good personal credit, knowing your proof of concept, knowing your profit margins will help you to evaluate your business. So for example, let's say you need money for advertising, or you need money to hire more employees or to purchase equipment. You should be able to pinpoint, if I put $20,000 into this avenue of my business, it should give me back $30,000, $40,000, $50,000 within 3, 6, 9, 12 months. So this goes into my next point. You'll need to determine whether you need short-term funding or long-term funding. Short-term funding is anywhere between 30 days and 18 months. Long-term funding, anything past 18 months. So you may need short-term funding if you know, all right, I put $10,000 in my advertising and it's gonna generate me $20,000, $30,000 over the next 6 to 12 months. It'll be best to go after a business credit card or business line of credit versus if you know you need a lump sum of money, $100,000 plus, to open up a franchise or purchase some equipment, and you know it'll take you, 2, 3, 4, 5 years to pay back, then it's better to go after long-term funding. Once you figure that out, now let's look for lenders that offer the type of funding you need. So on the short-term funding side, you can go through traditional banks and credit unions. So you got your big banks, Chase, US Bank, Bank of America, Truist. They will provide you with those 0% introductory business credit cards. If your business is a year or 2 old and you have the tax returns, you could potentially get the business line of credit through these traditional banks and lenders as well. So if you need the long-term funding business loans, your best bet may be going with online fintech lenders or any lenders that are backed by the SBA. You want to do your research and decide whether you want to go with a traditional bank or credit union, or if you want to go with an online lender. So once you determine what bank or lender you're going to go with, you want to reach out figure out what their requirements are, and then put in your application. So with short-term funding, you should be able to receive your business credit cards, lines of credit within 7 to 10 business days. With the long-term funding, because it's more documentation required, it's a higher amount that you're seeking, it may take 30, 60, 90 days to get approved. But that's pretty much the steps that I've taken to secure over $300,000 in funding for my business. No matter what type of funding you're looking to get, it's important to make sure you and your business meet the criteria that the lenders require. Taking the time out to do this will highly increase your chances of getting approved. If you've been getting denied for loans, credit cards, and lines of credit, watch the video to my left where I break down how you can repair or improve your credit so you can leverage it to create income. Appreciate you guys for tapping in. Make sure you hit that subscribe button. And as always, have a play for your money, family. Let's get it.